Quick disclaimer here, trading is very risky and carries a high level of risk. Anything said here is not a financial advice. Make sure you trade with money you can only afford to lose. Stay safe. The only way I'm using 5 stop loss is not because I'm rushing to enter every single trade at every single point of interest. No. Yo, what's going on, guys? This is the voice of TRADEWITHWORLDBANK here. It's a beautiful weekend out here again, but as at the date of recording, today's dates right now is November 27th. So if you are watching this video, it's probably not going to be available November 27th. That's due to the fact that I'm currently in NYSC camp, and you know, so this is pre-recorded, and that is why this is not a video on analysis. But I would continue on where we stopped on the last video, which was issue of liquidity. So let me delete all I have, and in today's video we're going to be looking at how to add more confluence to your demand or supply zone to show that this supply or demand zone is a valid point of interest, which you might want to be using for your point of interest and taking trades, which is liquidity. Okay, looking at liquidity and liquidity grab, like what I explained in the last video, with the use of internal range liquidity, you can use that as a little more confirmation after checking the trend. You want to be sure that, okay, this supply zone or this demand zone I'm using is a valid demand or supply zone. That is with the use of liquidity, that or liquidity grab, what we know as liquidity grab. Now look at everything that has happened here. Yeah, we can call this a liquidity grab, and now this is a break of structure over here. We have the break of structure, and the next thing is the demand zone. So we have two demand zones here. We have the demand zone here, and then we have another demand zone below, right below it, like this. Yeah, so still on the context of confirmation entry, you need confirmation entry even if that demand zone is giving you all confluences that you need in this world. It's still very important to take confirmation, because though some people might say confirmation might take a lot of time, some people might say confirmation might not allow you to get in the trade, but it's still fine that seeing all the confluence on a particular trade and then eventually still hitting stop loss is not really nice like that. It's not really nice. So the best thing is always to look for confirmation on that point of interest, even though the point of interest has given you a lot of confluences. So let's look at this demand zone over here. Okay, this, we didn't get a pullback into this demand zone, but then let's continue. We had another break of structure here. Again, we have another break of structure here. This is the liquidity over here. You can see there's a liquidity graph to the left, and then this is the demand zone. So I would love to use that demand zone, more valid demand zone now. It is a valid demand zone here because there's a break of structure and the liquidity has already been grabbed. Okay, most of the time this is common with BTC, though. This is common with BTC and other pairs. As I'm checking it on only BTC. And then some people might be asking, what's why am I taking this trade inside this liquidity here? So as you can see, there's liquidity here, and then some people might say, okay, this is a point of interest, the extreme point of interest. Now that's why I said it's always still nice to always use the zone that has the liquidity, the zone that has liquidity grab, and also to make use of the confirmation entry at the point of interest. So you can see what's happened here. Tapped from it a little bit, tapped away a little bit, and then continue dropping. Okay, this is a range after a strong drop. Okay, now the drop is trying to continue again, to continue its journey. But if you look inside the structure here, inside this structure over here, you would have seen that, okay, there's already a downtrend coming on, and then you might want to take some sales into these demand zones here. So immediately this demand zone broke, what is the next thing your mind is programmed to do? You want to start looking for sales into the next demand zone, which is this demand zone over here. You understand? So when you're looking at structure, you're looking at both the bigger structure and the inner structure like this, smaller structure like this, and then the whole overall structure and even the market structure itself. bigger market structure, the inside structure, and the internal range movement. Then you might have got some cells over here, and look at this from this extreme liquidity zone over here, that demand zone. Tapped it, went up and dropped. Now had it been used instant smelling order here, look at what happened. Just went up a little bit and dropped. That is why it's very important to use confirmation entry. Confirmation entry is very, very important. Very, very important. No matter how the whole confluence looks like. So this is strong confluence here, right? This is enough liquidity, right, for this demand zone over here. Just the way they'll show you guys on Instagram, whereby they'll give you a before and after, and say, okay, this liquidity, this break of structure, this demand zone. They'll label everything, and then sometimes it will even play out, but then they won't show you the ones that don't play out. That's just it. They won't show you the ones that don't play out. So you have to be very careful, because when they show you the ones that play out, they'll just tell you, oh, they use risk entry confirmation, whereas they might not even take the trade. That's something about Instagram. That's the dark side about Instagram and social media. You won't see the truth. That is just it. You won't see the truth. So they'll draw all these out as liquidity, label everything, and then maybe something like this. Now look at this over here. Let's use this supply zone at the extreme. So they'll say this is liquidity, and this is the supply zone, this is the entry, and then the drop. You understand? So they'll only show you the ones that play out, they won't show you the ones that didn't play out. So right now, this is what I'm telling you. It's always very important to use confirmation entry. If not, it's always dangerous. That is why I can use 5 pip stop loss. The only way I'm using 5 pip stop loss is not, oh my god, sorry about that. The only way I'm using 5 pip stop loss is not because I'm rushing to enter every single trade at every single point of interest. No, it's because I'm taking my time to wait for the confirmation entry to show up and then strike at the right time. You understand? I'm waiting for the confirmation entry to show up and then strike. That is why I'm able to use 5 pip stop loss. I'm also trading it with the appropriate session of the currency pair, because it is good to know the session that your currency pair is moving in. That is one reason I stopped trading Bitcoin. And then another reason I stopped trading Bitcoin is because of the bullshit that is happening around the cryptocurrency markets. It's complete bullshit. So I wouldn't want to put money where companies can control the movement of the market value of a particular coin. So that's why I just stopped trading crypto. Then okay, so I was talking about liquidity. Look at this also. So now we have two demand zones here. This is a demand zone, this is a demand zone. This one, there's liquidity grab already, so I'll love to use this demand zone. I won't say there's liquidity anywhere again. I won't say there's liquidity anywhere again. I'll love to use this demand zone. Look at how that's played out nicely. Tap the demand zone and then continue moving up just like that. So I wouldn't disturb myself trading, waiting for a pullback into this demand zone. Why? Because I've gotten a fresh demand zone there's already a liquidity grab. So this demand zone is a valid demand zone. Yes. First things first, never forget the break of structure. The break of structure is the first important thing. Structure is the first important thing. Then after that, you look for other confluences like the liquidity, and then your sometimes you can use what's it called, Fibonacci. So let's use Fibonacci over here. This is a uptrend, at least from here to here. So you draw it from the extreme low to the extreme high, right? Now look at that Fibonacci zone. It's exactly on 0.5. Exactly on 0.5. So that's beautiful confluence for that demand zone over there. And there's already liquidity grab on the zone itself. So tell me why I don't want to take my chances on this trade. Using confirmation entry, I should get an entry here and then boom. Because look at the range, and then boom. So that is how it works. Let's follow this buy movements price action over here. Look at this. There's already something happening there. Something is happening over there already, and there is a break of structure too. There's a break of structure to the left, just like that. There's a break of structure, and yeah, this is the demand zone. Okay, that is the demand zone. And as the investigation of the demand zone, I would love to look for confirmation entry. and look at what happened, spiked again. So that's probably because if you look at the left again, it had already started following an order flow over here, order flow to the left, bearish order flow, you understand? So you could have cut, instead of waiting for this whole demand zone to be mitigated, definitely you have to wait for the sales. You understand? You have to wait for the sales. So anything that even happens here, any reaction that happens here is a reaction to sell. It will be a buy to sell reaction because the order flow is bearish already, the movement is bearish, everything is bearish. It might just be a buy to sell, you understand? But look at what happened again. The price action here is even crazy. So it went up a little bit, dropped, completed the sell, dropped a little bit, and then broke out and retested from this trend line over here. Yeah, broke out and retested that trend line. That's the trend line confluence trade for us. Beautiful one. And boom, just like that. So this anything that happens is a buy to sell. Why? Because there's already a previous order flow reaction from here that might not allow price action to continue going up from here. But look at what happened. Tapped a little bit, came down, and then boom. So let's just continue checking. Let's move to another pair. Let's use GBP/JPY. On GBP/JPY, I'm trying to. So on currency pairs, you can see now there's no much spikes on currency pairs like cryptocurrency, but then you can still see them. If you are used to it, you still see them. Look at this resistance over here, just like that. That's the liquidity graph. Look at the week, and then where's the break of structure? Is there a break of structure? Yes, there's a break of structure. And then what's the next thing? Supply zone. So you wouldn't expect me to not take this trade, okay? Though there's no much liquidity here, there's not even liquidity there at all. So let's just continue going. Now this is the typical example of liquidity and liquidity graph that everyone knows. Yeah, like that. Break of structure, and then the supply zone. This is the typical example, yeah, of the normal liquidity and liquidity graphs. You understand? But then it doesn't always happen every time like this. It doesn't always happen every time. But if you look internally again, just try to look inside this beautiful range over here. This can be a liquidity graph, right? This can be a liquidity graph. Then where will be the supply zone? This will be the supply zone over here. And where's the break of structure? Break of structure is here. This is the break of structure, right? So those that love to look more internally, like, okay, this guy is explaining something different, and yeah, now look at it, just take a look at it very well. Yeah, liquidity grab, just like I explained. But looking at these points now, what's the problem here? There probably is not an entry here. There's very high probability that there is no entry at this point of interest over here, and then it switched out of it, dropped a little bit, and then went to the extreme point of interest. You understand? So that is why I said no matter how much confluence you get on a point of interest, it's always very important to wait for confirmation entry. To wait for confirmation entry is very, very important. That is why I'm able to use 5 pip stop loss, and I'm able to do well with it, because though some people are saying 5 pip stop loss is dangerous, but then is 30 pip stop loss not dangerous? Is 20 pip stop loss not even dangerous also? It's just about your psychology. It's about your psychology. That's like high level precision. You have to be very, very precise. And you have to, be on the market almost every time. Not every time, but at least when you want to enter the sell or the buy. So I'm very used to that, and yeah, that is how I do my things. Confirmation entry is very important. Okay, look at this now. Liquidity grab over here. This has grabbed liquidity. Where's the supply zone? This is the supply zone. I think this one was on last week. Yeah, this one was last week. So played out a little bit, sold, and then continued. But why did this sell not play out again? Look to the left. What has happened? Price action has already started buying. It's already bullish. Price action is bullish already. So you might not really want to take a lot of sales from here because you are holding some buys over here. Let's look at Euro USD now, or AUD USD. It is Euro USD. I traded Euro USD. Yeah, Euro USD. Yeah, I traded Euro USD last week, and then it was AUD USD. Sorry, I was able to get some buys around on AUD. This is the same price action, so I'll be using the word AUD instead of EURUSD. On AUD, I got a buy around somewhere here, and then the supply was here, right? This is the supply zone on AUD. So basically what happened was, when I was holding the buy, I already knew that if it breaks out of this demand, if of this supply, it's probably continue going up like that. And I held the buy because it was even enough for me to hold and even allowed to break even, because it was a running trade and I was fine with the loss or break even. But then, why did this supply do not work out? That is because the bullish order flow was already in place, that already formed. Look at this here, second one, third one is almost forming, which was probably from the sell here too. Yeah, that sell reaction. So everything that happened was just a sell to buy reaction. Now it was no longer a major sell. Why was it no longer a major sell? That is because of the movement inside here already. Movement inside here that already swapped from bearish to bullish. You understand? So now, if the order flow here moves from this bearish, now it has moved from bullish right now. Now it's trying to move bearish. If that bearish order flow continues and I see a reaction from that point of interest there and there, trust me, this buy is not going to be so strong. You understand? It's not going to be a complete buy trade. It's just be a buy to sell to complete the selling order flow. You understand? That is because the selling reaction has started and it is already almost completing. So anything that is happening here on this buy demand zone is just going to be a buy to sell reaction, and then the sell continues just like that. That is how most of these price action behaves, especially when it comes to demand and supply. From demand to supply, supply to demand, demand to supply again, supply to demand. Whichever strategy you are using, that is what you believe moves the market. A person using indicator believes that indicator is the one that moves the market. So that is why I'm also saying price moves from demand to supply, supply to demand, because that's what I trade and that is what I always see. You understand? So I'm not saying that is what the bankers do or that is what the big banks do. I'm just saying it from what I've been seeing. You understand? So I think that'll be all for now. Peace, guys. See you in the next one.